From Wall Street to managing hundreds of millions in client money, Nick and I use our alphabet soup of credentials to discuss the investing and tax strategies that actually work. Oh, and we played Division I college football together, so strap in. This one hits hard. Let's go.
Alrighty, folks, we have 4 critical topics that we must discuss. Many of them are moving and grooving as we are recording. Number 1 is going to be the peace deal. Do we have it? Do we not? Let's assume we do. What happens next? Then we can talk about SpaceX. They are trading for their first full day. As of this morning, they are popping 5 or 6% already. I do want to talk about the yen carry trade because something very important is going to happen tomorrow. Stay tuned for that. And the most important thing this week is Wednesday when Kevin Warsh closes up his first Fed meeting and gets in front of that microphone. What fireworks is he going to unlock? And of course, in order to do this, we're going to talk with Taylor, CEO of Life Goal Investments, been on Wall Street more than a decade, helping the top 1% of the 1% make some moves. Taylor, man, what's going on? And let's talk that peace deal. It's breaking news on Truth Social. It's now everywhere. What say you?
I mean, this is the 39th peace deal that we've now generated, so it'll be interesting to see. Yeah, now this one, I mean, it does seem real. Both sides seem to be on board with it. I'm still suspect in the fact that literally there have been, CNN ran a poll, there have been 39 peace deal approaches thus far. And so it sounds like Friday, this thing is going to come to fruition, but there's, however many hours, 96 hours between now and then that things could unravel. And that's been the case thus far. So hopefully this time's different.
Well, yeah, let's, at some point we have to make I'm going to ask you to make an assumption. Let's just assume for a minute it goes through. They have this great signing in Geneva on Friday and we go on. And then if we want at the end, we'll assume it blows up and we'll talk about that next. But let's assume the peace deal happens. We are already seeing the market drastically change. Oil now below 80. Yeah. Right. Markets ripping, rates down significantly.
Yep.
This could be a gift to Kevin Warsh, a gift to President Trump if this sticks, right?
Oh, it absolutely could. And with the backdrop of earnings doing what they're doing, This has been that one big nagging outlier. I think the market is basically priced for this to have taken place. So I don't think that you're going to get this big, massive rally out of stocks, although you're getting a good move today. And the oil side of things is really that kind of linchpin that's starting to move down. It's actually, I heard Brian Sullivan on CNBC this morning say that at that juncture, and it was 5 a.m. Eastern time or whatever it was this morning, $80.23 a barrel was what WTI was trading at that juncture at that point this morning. And that is exactly to the year, to the penny, what it was a year ago. And the price of gas now is not directly incumbent upon oil, but obviously it's the largest driver. Last year, the average national price for a gallon of gas was $3.15. And today it's right around $4.06, $4.10, somewhere right in that ballpark. So this should directionally take gas prices lower, which is incredibly important because we are entering the travel season here.
Yes. Yeah. Travel season, really in full swing. Usually they say it starts Memorial Day. So we're in that. But again, if we kind of look at the calendar, something that we have in November is called the midterm elections. And if we go into midterm elections and gas is going lower, not higher, the economy is strong, adding jobs as it did last week or the week before, whenever those were reported. And, oh, by the way, here's the other, just how math works. Inflation's going to look a lot better in November than it does today, right? The base effect, falling oil. Yep. There will be lots of True Social posts about crashing inflation.
Yep.
Just how math works. So this might come together for him.
Yeah, because if it doesn't, right, and things were to go the other direction, the midterm is going to be a bloodbath, and we talked about that before. The Democrats would almost definitively take the House, and so oil's a driver, and it's that billboard that everyone drives by three times on their way to work and 3 times on their way home of the gas prices. So it's something that really, really, really sticks in people's minds. And this is a win. Now, granted, let's talk about the front end of this was largely self-inflicted. And it'll be funny when we look back 5, 10, 20 years from now, whether this is deemed as a success or a failure. And I
Dude,
know
it might be interesting in a year. Why are you saying 5 to 10 years?
Fair.
Next year, I want to look back.
I think that's the reality of the confluence of things that takes place in the Middle East. I think is very interesting because basically there's one of two ways of looking at this. We just went in there in a war that was unprovoked by us, and in something we didn't necessarily need to do. I think the other side of it is, and this is maybe playing the long game, and I'm just trying to play devil's advocate against the populist opinion right now, where we shouldn't be there. And granted, I tend to fall on that side of the sword as well. But to be clear, just to try to see the other side, I've heard it referred to as mowing the lawn. Like, you have to do that once in a while. And so every 10, 15, 20 years, whatever it is, we have to go and shake the tree of people that are running terrorist organizations around the world and, creating nuclear weapons, and something where if you don't go in and shake them out, you don't know where it would wind up. And so there is a long view perspective of like, okay, I know this is not a heavily supported war, and it's not supported by me either, to be clear, but that is at least the counterpoint to that.
Yeah, again, I'm going to stay out of the politics of this one. I just want to stick to economy, inflation, deflation. Yep. Again, if this happens, if the Strait of Hormuz opens and there are no tolls or fees or whatever the hell they're calling that, I still think we're going to have inflation because it's in the system now for the next 3 to 4 months.
Inventories, right? Oil inventories.
Yeah, inventories. Yeah, it's just going to take a while to shake out. But lo and behold, right around October, November, it should start looking better and better. Now let's just turn the coin over and say something happens in the next 96 hours. Israel does this, or we do that, or Iran does this. And, this violent snap that we had lower this morning could quickly reverse the other direction, correct?
I think that the downside for this one would be more would be a larger magnitude than what we've seen in the other. Hey, we got a deal on the table, and no, then it gets pulled off, etc. This is the first one that feels a little bit more sincere.
This feels real, right?
Yeah. And Pakistan being the entity that's running the negotiation in the middle there.
You have a signing date and a location, kind of important.
Yeah. It is funny though. I did hear this morning that being that the supreme leader there is who is it basically? Yeah. They don't know if it'll be Trump that actually heads over.
No, I don't think it would be. You don't want
JD or someone like that.
Yeah, I agree. All right, well, let's get off that again. I think both of us would pray, hope, pay for peace. So let's hope it sticks. Let's hope there's a great signing on Friday and this gets behind us. And we move on to the next thing that's fun and interesting. And let's actually talk SpaceX next. SpaceX went public. I will admit it started trading much earlier than I expected. I thought it would be a 2 or 3 p.m. first trade, and I think it went out before lunch, right before noon, right 11 something. Orderly, I had a little pop at the open and then kind of traded back and ended up, I don't know, 10-15% off that, and actually did not perform as well as I thought it would.
I heard a couple arguments on this, and listen, Elon is a diabolical character. People love him, people hate him. So this isn't a referendum on Elon, but I will say this, and I agree with the comments that I heard. Like, Elon priced this better than any banker has priced an IPO in a very long time. What you want in an IPO is you want to come in relatively close to what the price winds up settling out at. The last thing you want to do is overprice it and then put the tape in a downward market, because so many question marks start to build there. But the other end of it is you price it too low and the company leaves money on the table with not garnering enough on that lift. So with a 20% pop in the day, that was literally about as ideal as you could possibly make it. And it's, Elon looks brilliant at the end of the day with the pricing of this, because let's be clear, the bankers did not set that price. Elon did.
No. Oh, of course. Yeah. Let's be very clear. Elon set the price. And on that note, we have our first trillionaire walking amongst us. I have to admit, as a young child, I thought billionaires were these mythical creatures. I never fathomed having a trillionaire walk among us. I don't know what that means, but crazy to think about.
I'll put some context to it, because I just heard this on another podcast this morning. Let's say we have $1,000 bill, which is whatever, a millimeter thick or whatever it is. Yeah. $1,000 bill. If you put $1 million out, I think that the stat was that it's 4 inches high.
Sounds about right.
$1,000 bills stacked up to be $1 million is 4 inches high. To be $1 billion, it is the height of the Empire State Building.
Okay.
To be $1 trillion it is 67 miles high. So like our brain really struggles to fathom how many zeros and what the scale of that is. And that even becomes funny where one person has that much money, but it also becomes funny when you think about Congress and like, oh yeah, we're going to run a $2 trillion deficit this year. And people are like, oh, okay, it's $2 trillion, whatever.
Yeah.
And
whatever.
It's like, oh my God, the amount of money that we're talking about here is absolutely seismic.
Yeah. Well, there you go. Let's get to the yen carry trade, because I think something happens tomorrow in Japan that could be a nothing burger, or it could revisit what happened last time. And folks, if you don't know, it is rumored that the Japanese will be the second large central bank to raise rates. Yes, I said it, raise rates. ECB was first last week. It is rumored that Japan will raise rates. I will say that this time it won't be a surprise. They are clearly telegraphing this raise, so the market won't be caught afoot. But yeah, the yen carry trade, are we going to hear about it the next 48 hours, or is it just a big nothing burger?
We're going to hear about it. I think it's just such a directional change right now. They have raised rates in recent history, but from a negative rates were negative in Japan for an incredible period of time. So it was everyone's favorite ATM to go borrow money in for free and then chalk it into the Magnificent Seven, right? And that was what was taking place, and that's what unwound. What was that? August 6th of 2024. So we're coming up on a 2-year anniversary out of that. But that's what caused the market to puke that August day where NVIDIA just got absolutely smashed and everything gapped downwards. I think the market opened on a Monday down 6%. And everyone is like, a yen carry trade? What is that? And so for so many retail traders, it was like, I have no idea what they're even talking about here. But effectively what it was, again, think about an ATM that literally will pay you just a little bit of money, pay you money to take it out. Sure. And then you can take that money out and bang it into whatever is the most popular trade at that given time. And hedge funds were doing it to a massive order.
They were levered.
They were levered on it. Exactly right. Yeah. And so when all of a sudden then interest rates ticked higher in Japan, what they said was, okay, now we're getting unwound out of this position. We got to pay it back. And there's actually an interest rate associated with it. Whereas I was getting paid before to hold it.
Right. Yeah. And the biggest thing people don't understand about the yen carry trade, it's not the delta between the rates. You also have currency risk.
Correct.
Which can be this big unknown that could really bite you and really cause a lot of pain. I do think there's one thing different this time versus, I'll call it 2 years ago, just, round numbers. We had an easing bias in the United States. So Japan was raising and we were lowering and hence double compression right from the top and the bottom. Yep. I think it's hard to say we have an easing bias today, but again, we'll get to Kevin Warsh in a minute.
I was going to say, I think that's completely up for debate whether we have an easing bias or a tightening bias right now. It's a two-way go, and we don't know which way that two-way we're going to get there. But
we'll get to that one in the next topic. But I do think that the bet right now, again, if you look at the Fed watch tools, is 0 rate increases, 0 cuts this year, kind of higher for longer. And again, the Japanese are telegraphing this rate increase, so I don't expect it to be, a 6% down day, for example, but I don't think you can lose because the yen carry trade's not done with its, twisting and turning. I don't think.
No. Anywhere it seems there is any bit of a free ride, right? The market doesn't provide free rides. Like there was always risk associated with that trade. It happened all at once 2 years ago when that risk unwound very, very quickly. But anywhere that you can get the smallest amount of advantage, the markets are incredibly sophisticated. So they will strip out that arbitrage, strip out that advantage very, very quickly and use it to benefit their underlying stakeholders in a hedge fund, in a mutual fund, in whatever it is. And so that advantage still does exist. There's still incredibly low rates there relative to where we're at here. It's, the Japanese 10-year is at something like 2.5 or something like that, whereas we're at 4.5 here or darn near it. So it's much cheaper money there than it is here. And so that delta between the two, although it's compressed, is still seismic. And so therefore that trade is still underway. There's no doubt.
Yeah, it's still playing it. Again, it was 400 basis points. Now it's 200. So again, not as much juice coming out. But again, Wall Street will take it. Free money, levered free money.
Well, and to your point, though, typically it's not the known risk. It's not the known risk that causes the market to absolutely freak out. So like even, and now I'm talking out of both sides of my mouth a little bit, but like we still have the known risk of this Friday, this peace deal not coming to fruition, right? So that's a known risk. So the market isn't going to absolutely puke down 10, 20% or something like that. I do think that this is the market's highest level of conviction thus far that the deal is going to get done. So therefore there is downward pressure that will be experienced if this one doesn't come through. And then also like, it's like a negotiation between you and an employer or you and whatever. It's like, okay, we're going to negotiate. We're going to negotiate. We're going to negotiate. And then at some point it feels you're close. And then if you're not close and it breaks, then things unravel quickly in opposite directions. And it's an F you. I'm okay. We're not
next.
Yeah.
All right. Well, let's get on to Kevin Warsh, because I think of the four, this is the most, most important to my community, probably the most important to the economy, because you got Kevin Warsh coming in. He's got a divided Fed, again, 8-4, the last meeting. 3 of them wanted to remove the easing bias. Let's talk about that first. Is Kevin going to have to give up that easing bias to placate the rest of the Fed? Because I don't think we're getting a cut or a raise. Let's just take that off the table. I don't know. Does Kevin lose the easing bias?
This whole thing playing out on Friday is very, the week is very timely that you get this massive reprieve in oil. Going
Ain't it good timing?
It is. If it went the other way and oil prices, we're at 90, 95, 100, or something happened, God forbid, to have him go even higher than that, he would be stuck between a rock and a hard place. So it'll be interesting to see. I mean, he's put in that chair because he is kind of an easy policy guy. Now he's not, he's a balance sheet control guy.
Yes.
But from an interest rate standpoint, he is a believer in lower interest rates. So his bias is certainly to move in that direction. I think this week is an opportune time that allows him to at least signal that that is on the table. I think if he is staunch in the fact that this direction is southward in interest rates, I think the market will continue to move. And I think it'll move quickly because I think there's that huge outstanding question mark right now. There's a slight tightening bias right now out of the market where they perceive interest rates more likely at the end of the year to be higher than they are lower from this point. So if that unwinds, I think that is gasoline on a fire right now. And I think that blows this bubble further. And all of a sudden it starts to inflate it more meaningfully.
No, I agree with that. I think if Kevin Warsh is successful in keeping the easing bias, that will surprise the market, to your point, and blow the bubble bigger. I do think, given where most of the Fed presidents are, he's going to have to give up on that. And again, I don't think he's going to care. He's playing poker, and he knows the game's not about this hand. It's the next hand, right? July is, in my opinion, far more important than June, right? June's the first meeting. Hey, I'm the new guy. This is what I want to do, kind of nonsense. And then nothing happens. Yep. But July, that's the game.
And I think he's become very clear in his intent to keep his mouth shut.
Yes.
Which is I don't know if that makes knuckleheads like you and I, our job more interesting or less interesting in the fact that now they're not telling us what it is that they want to do. We have to infer it through their actions, and it becomes a more closed door type
opaque
scenario. Yeah. So all of a sudden we get to, then think about all the crazy stuff that could be coming out of them. So, but it'll be interesting. I do think, and we stated this, I think on the last episode, that like, listen, we need all the other knuckleheads to shut up as well.
Yes.
Not just the Fed chair and their ability to say less, because they don't know anything. The data changes. They are not good at forecasting. We've seen that time and time again. They're late to the party.
The dot plot's going to be flush, don't you think?
Yeah, I think so. I want the other ones to shut up as well. Like, I don't care that you're in that position and that you want to be Fed chair someday, or you want to have book tours someday, or whatever it is. Exactly. It's keep their mouths shut, because they talk against each other. One says something on a Thursday, the next one comes out the next Tuesday and says the opposite. The market rallies higher, rips lower. It's just nonsense.
All right, so kind of play the game with me. Kevin Warsh just wrapped up his first press conference. The vote comes out. If you were going to pick the top 3 things that you think happened, like if you were doing a parlay, what would be the 3 bets you would put on for that press conference?
Yeah, I think that he tries to lean towards easing bias continued. Okay. And I think that this week is an opportune time. I think people are shocked at how less candid he is, how more guarded he is. And the last one is like, the outstanding is the question mark, that outside flyer of him reverting course. Now, you got to put low probabilities on this, but saying like, hey, this inflation thing, it isn't transient, or it isn't, what's the word I'm missing that they said? Transitory. It's not transitory, because what we also saw is that I did a video on this the other day. It's our inflation movement happened when it inflected higher. It happened a month and a half in advance of the Iran conflict. So we've had this inflection point that it's not just oil. And by the way, the trajectory of our inflation has moved rapidly higher than all other G7 countries. And the other G7 countries are incredibly oil dependent, whereas we're the exporter. So there's more things at the core of what's causing inflation than just oil. So in the event that he makes some sort of referendum around that, that would spook the hell out of the markets.
All right, let me give you my three-legged parlay.
By the way, you gave me no warning that I was going to be put on the spot for 3 points. That's what I came up with.
Not bad. Not bad. Well, here's my three. I just put these down too because I had no idea I was asking you this either. So I figured I might as well step up too.
Yeah, but you're better off the cuff than I am.
I don't know about that. So here's the first thing I think he's going to talk about. He's going to talk about oil. But more specifically, he's going to spin it as a supply issue. And the Fed doesn't drill, it doesn't print neutrons or atoms or whatever. And he's saying the tools that I have or we have at our disposal can't impact physical supply shock. So I think he's going to talk about oil as a supply shock, number one. Number two, this is the one that I'm really leaning into. And I'm either going to look like a genius or a complete clown.
I love this.
So do I. This is fun for me. It's bipolar. I think he's going to try to do the Jedi mind trick on inflation. He's gonna talk about this new way of calculating. He's gonna talk about why he likes it, and it's mean trimmed inflation or something like that. He's probably gonna
mean trend, I think is what it is.
Something like that. He's gonna have to name that something else because it's a shitty name. But he's gonna basically talk about it, and he's not gonna talk about PCE core. And I think he's gonna try to educate the audience on why it's important. So again.
And those two run together, right? Because the oil and the trim to mean, and it's correct. Not core PCE isn't stripping it out, but this is doing it in just a different way. So basically, you're just talking about the fact that like supply side things, shocks that are out of control, the Fed, that's effectively we need to start reacting to that. And he's not wrong. He's not wrong making those comments.
I think he's going to do this, and yes, it's probably. PCE core and this are probably fairly correlated given the shock is, but again, I think he's going to use it as a reason to educate folks because he wants the big outlier of reporting thrown away. Yeah. Is it new cars or used cars? Is it insurance? I mean, it could be anything in a given cycle. It just happens to be oil this time. Mm-hmm. So he's going to talk about that. He's going to be very, kind of by the book and, this is a better way and blah, blah, blah.
He's a nerd too. So like, let's add, he's a wonk. That blends
he's a
well
9-figure wonk.
Yeah, exactly right.
All right. And then here's the third one. I actually think of the three, this is as close to a layup as I have. Maybe it's a free throw. He's going to talk about the Fed needs better systems and better data. We need to throw away the telephone calls and we need to rely on systems and we need to have millions of data points every day as opposed to 17 phone calls a month or whatever they do today. So those are my three legs. What do you think of those?
I love the last one because the data that we're getting from every perspective out of the government right now is so flawed. We're getting an average of 57,000 job revisions on a month-to-month basis. And that's like, to be clear, that's on a number that's on a number that's like 150. So like you're off by a third, right? So these are huge margins of error. So no, I love that last point because no one trusts the data right now, but it's the devil, So the market, it's not that the market doesn't trade off of it. The market certainly does trade off of it. So whatever that jobs data, whatever that inflation data, but it's this big, to use your word before, opaqueness of it. Like you really don't know the validity of the underlying information. There's been, at one point we had it might have been annually. I think it was
an annual 986.
I was going to say almost
986. Yeah, that's not good. That data's poor.
No.
Well, you just talked about jobs, and I know we missed last week. So any thoughts on the monster jobs numbers? We had better JOLTS, better ADP, and better BLS a little bit over a week ago. What'd you think of all that?
It just seems like our economy is heating up again. And I think that it's all indicative of what the AI play out is. So the part of the fear in me, if I'm being, the negative Nancy on it, is the fact that like as we build out these AI data centers, et cetera, there's a skilled labor that is needed to do that, but that is a short-term job. Those aren't things that are perpetual in their nature, as we want to build out as quickly, as rapidly as we can. And it's just something that's again, that one particular sector that's driving the entirety of the market. It's a race to build. And when that race ends, I don't know if those are sticky jobs. And I think that the other end of it is like, not only is that not a sticky job, but it's also taking that new college graduate that's white collar, that should be getting a young analyst type role, and flipping that old model on its head.
Yeah. Well, again, Taylor, you are the CEO of Life Goal Investments, a firm that helps the top 1% of the 1%. We appreciate you coming on this channel each and every week and making us just a little bit better. Where should people follow you? Because you put 5 minutes of value in 60-second clips, and I still don't know how you do it. Where can they find you?
Now, first of all, thank you for having me. It's a pleasure. You are one of the most well-read economists that I know. So it's fun for me to come on here and get an education from you. You see things from a different perspective, which is awesome. So thanks for having me. But no, we are on Instagram, we're on TikTok, we're on LinkedIn, we're at Life Goal Investments. And again, it's a pleasure putting out stuff every day, trying to see how succinctly we can put a complex message and make it relatable to the layman.
Yeah, it's really, truly impressive. Guys, go check them out. Life Goal Investments. Tell them, send them a DM. Say hi from one rental at a time.
We get them all the time.
Oh, that's awesome. I'm glad to hear that. Thank you.
Quick ask. If you're enjoying the show, hit the follow and drop a rating. It helps more folks find our podcast. Thanks so much.
The information discussed in this video is for educational purposes only and should not be considered investment, tax, or financial advice. Investing involves risk, including possible loss of principal. Always consult a qualified financial professional before making any investment decisions. Past performance is not indicative of future results.